Big tech earnings are pressuring the market this morning, while crude oil approaches $100 and Treasury yields move higher. This is the United States pre-market update for Thursday, July 23rd, 2026, updated at 9:15 Eastern Time. The overall market bias is cautiously bearish. The latest pre-open indications show the S&P 500 down approximately 1.06%. Nasdaq 100 futures are leading the decline, down roughly 1.51%. Dow futures are lower by approximately 1.13%, while Russell 2000 futures are down about 1.1%. Sentiment weakened significantly as the opening bell approached. The first major driver is earnings from Alphabet and Tesla. Alphabet delivered earnings and revenue above expectations, but investors focused on a large increase in planned spending. The company now expects capital expenditures of between $195 billion and $205 billion this year. That raised new questions about how quickly artificial intelligence investments will generate enough cash and profit to justify their cost. Alphabet shares are down about 5.5% before the bell, with more than 3 million shares traded. Tesla is under even more pressure. Adjusted earnings came in at 33 cents per share, well below the 55 cents analysts expected. Revenue exceeded expectations, but Tesla produced more than $1 billion of negative free cash flow as spending on artificial intelligence, robotics, and research increased. Tesla is down approximately 8.1% in pre-market trading, with nearly 4 million shares already changing hands. The second major driver is oil. Brent crude has climbed above $98 per barrel, and West Texas Intermediate is trading near $91. Fighting in the Middle East and attacks affecting major oil shipping routes are raising concerns about supply disruptions. Higher oil prices can support energy companies, but they also increase transportation costs and inflation pressure. That is weighing on airlines, consumer companies, and interest rate-sensitive technology stocks. The third major driver is the labor market. Initial jobless claims fell sharply to 187,000. Economists expected approximately 211,000. Continuing claims also declined slightly to 1.796 million. The result shows that layoffs remain very low. That is positive for the economy, but it also gives the Federal Reserve less reason to worry about labor weakness. With oil prices rising and inflation still a concern, traders are increasing their focus on the possibility that interest rates remain high or rise again. The 10-year Treasury yield is around 4.69%. The VIX has climbed to approximately 18.85. That is still below the high fear zone, but it shows that investor anxiety is rising. The dollar index has traded as high as 101.37. Gold is lower, near $4,080 an ounce, while Bitcoin is trading around $65,500. There are several important company-specific moves. ServiceNow is up approximately 5.7% after raising its annual subscription revenue forecast. Thermo Fisher is higher after beating Wall Street expectations for both profit and revenue. The company reported adjusted earnings of $6.03 per share on revenue of nearly $12 billion. Lockheed Martin and RTX are also showing strength after raising their full-year forecasts. Defense and aerospace shares are benefiting from strong demand and increased government spending. On the downside, T-Mobile is falling more than 6%. The company beat profit expectations, but revenue came in slightly below projections, and investors focused on slowing account growth. Texas Instruments is down more than 5%, despite forecasting quarterly revenue above expectations. The reaction shows how demanding investor expectations remain across the semiconductor sector. In artificial intelligence and semiconductors, NVIDIA is down approximately 1.6%. AMD is down around 1.7%. Intel is off roughly 1% ahead of tonight's earnings report. Marvell is down about 1.4%, while Micron is close to unchanged. AMD will hold its advancing AI keynote at 12:30 Eastern Time. Investors will listen for product announcements, infrastructure partnerships, and any update to the company's long-term AI opportunity. Three stocks deserve especially close attention. The first is Tesla. The stock has a large gap, heavy volume, and a clear earnings catalyst. Watch whether it stabilizes near its pre-market price or continues to make new lows after the opening bell. The second is Alphabet. Because of its size in the major indexes, its reaction can affect the entire Nasdaq. The key issue is whether strong cloud growth is enough to offset concern about capital spending and free cash flow. The third is Intel. Its earnings arrive after today's close. Expectations are high because of demand for AI hardware and the stock's strong performance earlier this year. The biggest risk today is another increase in oil prices that pushes Treasury yields higher and triggers a broader sell-off in growth stocks. The strongest positive catalyst would be stabilization in Alphabet and Tesla, followed by constructive artificial intelligence commentary from AMD or Intel. The opening strategy is to remain patient. Mark the pre-market price and the first 5 to 15-minute range. Require confirming volume. Reduce position size around large gaps. Define the stop, target, and maximum daily loss before entering. This is market before the bell. Trade with a plan, control your risk, and never chase the opening move.